All right, welcome everybody to the first client support webinar from Tucson, Arizona. We moved everything successfully. We love it here. It's great. And here we go. All right, so today is August 30th. We're wrapping up the month of August. My name is Bennett McDowell, of course, with traderscoach.com. And we have Monday is Labor Day. Okay, so don't forget that the markets are closed. I've got Jean here with me, and let me bring her on and see if she has any announcements you want to make, Jean.
Well, of course. Well, welcome everybody. So great to see everyone. Give us a hello in the questions area, just so we know that you can hear the audio and also see the webinar screen. But yeah, great to see you all here, and pretty nice in Tucson. All right, well, back to you, Ben. Nothing new to report from me.
Okay, good. Audio is good. Thanks, James, a lot. All right, so let me quickly go through some administrational items here. So go ahead and start typing in your questions in the questions area of the webinar console. You guys kind of got that figured out, okay? Looks pretty good. Okay, we got RJ in Phoenix, so you're just up the street from us a little bit, right? So it's supposed to be a hot day here in Arizona. We're kind of wrapping up, from what I understand, the hottest period of time in the Arizona area, which I think ends at the end, pretty much at the end of September. So we've got about another month of it. But in any case, let me get started here and run through my administrational items. First thing I have to go over, of course, are the risks that are involved in trading the markets. You know, what we try to do is control our risk as best as possible. And if you need help with that, you know, this is the right place to come. This client support workshop type of thing is where I can help you with that. But it is vital to being successful in this business. You know, it's not all about entries and exits. It's about protecting your capital when trades don't go as expected. We work in a realm of probabilities when we make trades in the market, and sometimes we're on the wrong side of that probability matrix, and you can't help it. Okay, that's why it's a probability. So you have to be able to protect yourself from the downside of those times. And so risk control becomes an absolute must to keep those losing trades as small as possible while letting the winning trades run. So keep that in mind. And again, we've been doing this a long time, so we can certainly help you with that if you need it. So the other thing too is if we talk about certain methods, or perhaps we talk about certain individual stocks that we may recommend, please be sure to run any of the recommendations, suggestions, or ideas we have past your financial advisor. We don't know your personal situation, they do. And so some of the things we talk about may be suitable for you or maybe not, all right? But they're gonna know. So definitely, there's a lot of factors that go into figuring that out. So definitely check with them. And you also want to be trading with money you can afford to risk, called risk capital. If you don't, what tends to happen is you get very emotional in your trading. And of course, that's not the way you want to be trading. So definitely don't do that. And again, you know, it is possible to lose some or all your money trading the financial markets. So you got to be trading with money you can afford to risk. So that's kind of all about the risks involved in trading. Past performance, there's no guarantee of future performance as well. So keep that in mind. All right, so I've got a couple books, speaking of money management, that may interest you. And that, of course, we've got two of them out there. One is a very detailed book on money management, and that's the book on the far left that's called A Trader's Money Management System. But we came out with a book last year called Money Management for Traders, which is a pretty specific, concise, and excellent book on what you need to know to implement risk control into your active trading, or investing for that matter. And so that's a great book. It's a quick read, but a good quick read, and gives you all the information. We kind of try to simplify it. What I try to do with my books is I try to take stuff that I've learned over the last 30 years of doing this, and also stuff that's complex, and simplify it. And when you simplify some of these complex techniques, then you're able to use them. Otherwise, they're just so complex, you know, you kind of get bogged down in the you know, smallness of figuring out every little thing that you can't apply it in real life. And so that's one of the efforts I've really put into my books, is to simplify the complicated so you can actually use it into your trading. And so Money Management and Elliott Wave Simplified is proof of the pudding on that. And my new book, The Art of Trading, I think it's going to be my best book ever. Okay, it's a second edition. I was contacted by Wiley Publishers last year to do it. And I said sure, because the first book came out in 2008. And so it was time for an update. But not only did I update the material, I looked at the current market conditions and put some things in there that I think is important in today's market, because markets do change. They're the same, but they do change. Also, too, we have a lot of information on there on our software, and some things I've learned since the first book that have actually helped me to trade better as well. You know, trading is an ongoing process. We're always learning, no matter how experienced we are, we're always learning. So that is going to be in the new book, and I really think it's going to be the best book I've ever written. And you can pre-order that on Amazon. And Gene, when you get a chance, if you got it handy, why don't you put a link up in the chat area? If you don't find that, of course, you can direct people to the website as well. All right, same thing with our charting software. We've got extensive software tools on how to trade the markets. We use this for day trading. You know, we have a day trading room. Many of you are in that room, a lot of fun. If you like day trading, that room is a blast, okay? I love it. It's a great time. It's basically a family environment. We all have a say in things, and we talk about things. And a lot of times, you know, you wait in a day trading room for setups to occur, because we're very structured in how we do it. So we have some time to kill while we wait for these things. We have a lot of fun. We talk about a whole bunch of different things. So it really becomes family. You guys become family to one another, and it's just great. So that may be something you want to consider if you have the time during the day. But our software works on all time frames in all markets, and we have charting software at the top: ART, AL, PTF, TLM, and ERI. We have scanners and in the middle column there, multiple time frame scanner, for example, trade confirmer, turbo, Elliott wave. And that's how we find stocks based on what we look for in the markets, because, you know, there's over 10,000 stocks, probably a lot more by now. You keep adding things. So how do you find the setups that you like? Well, that's the answer. Okay, you have to have the scanners for that. All right, and then, like I always preach, you know, risk control is just as important as entries and exits. And so we have a whole suite of software, starting with the Trader's Assistant for record keeping and analysis, the risk reward calculator, and the trade size calculator. So those are all oriented for risk control. Okay, so that kind of covers the gambit of what we have to offer. We have a lot of courses as well out there. And so let me open it up to you guys now. I've done a lot of talking. What do you want me to cover today? And maybe there's a stock you want me to look up. Now, if you're using TradeStation, tell me if you want me to use TradeStation. I've got it loaded right here. Okay, so that's always right there, ready to go. So I've got Ninja and TradeStation. Those tend to be two of our most popular platforms. And with NinjaTrader, one of the advantages of NinjaTrader, if you're using a broker other than TradeStation, is that you can connect to your broker with Ninja. So for example, if you're using Thinkorswim, abbreviated as TOS, you can actually get the TOS data into NinjaTrader, because that is run by TD Ameritrade, and that imports into the TradeStation platform. So let me just start out. Is anybody having any trouble with anything? All right, is software working okay? Anything you want to add in, maybe helpful hints to other people? Feel free to go ahead and in the questions area, enter that in. Feel free to do that at any time. How about multiple time frame analysis? You guys pretty comfortable with that by now? Because you see me use that a lot, right? So multiple time frame analysis, basically, if you look at my setup, whether it's, you know, TradeStation or Ninja, this is Ninja, but TradeStation as well, you'll notice I have 3 charts here, okay? And then I have 3 charts on Ninja as well, okay? And this is basically on this time frame. These are These are for position trades. So this is a 60-minute chart. This is a daily chart, and this is a weekly chart. So when we talk about position trading, what are we talking about there? What is the difference between, position trading, swing trading? What is the difference in all that? Intraday trading, which is known as day trading. What's the difference between all that? What's a position trade exactly to you guys? Okay, right. So you're holding the position overnight, and then you've got to determine whether in your position trading you are thinking of holding the position for maybe a couple days or maybe much longer is your anticipation. All right, so when you take a look at the setup here, this is set up not for day trading right now, but position trading, because notice here I have a 60-minute chart here. So each price bar represents an hour. This is a great time frame if you want to kind of take a look at trades based for maybe a week. Could be 3 days, could be a week. So if you're kind of a very short-term trader and you want to look for swings, but not be in the trade for, more than a week or 2 weeks, sometimes you can be in a trade for 2 weeks with a 60-minute chart. Especially, but if you are, chances are it's going your way or it's going sideways. Unfortunately, that would be the other time. But usually you count on maybe the trade being about a week or 2 weeks. So if the 60-minute chart is something you want to trade off, then we call that your primary time frame. In this case, the daily chart is something that you would position trade for a longer period of time. So you'd be still holding a trade overnight, but your goal is probably to be in the trade a lot longer, maybe a month. And if the trade is successful, it could be up to 6 months, right? So a little bit different time horizon on that, and that would be your primary time frame. And then the weekly chart here is your long-term aspect of that, and this is kind of a time frame if you're looking at, for example, if you're projecting your targets and everything based off a long-term weekly chart, then you're going to be in that trade possibly for years, right? So you got basically a 60-minute chart, which is your short-term aspect, your daily chart for your intermediate. And so when you have all three loaded, you can look for opportunities on the different time frames. Now, I always put my primary chart and make it the biggest in the center. Okay, so I'm set up here for a daily, trying to find daily charts. And I've got the 60-minute chart set up so I can take a look and see if I need to wait or go in, even if the daily chart is saying everything is okay. I want to make sure the 60-minute chart is saying everything is okay. All right, that's important. And then I kind of want to make sure on the long-term chart, am I doing a trend trade in the direction of the long-term chart, or am I doing a counter trend trade in the direction of a long-term chart? Or am I scalping one of these time frames based on just the PTF indicator? So that's kind of all good to know. So here's where I want to kind of cover this. James, I'll get to you in a minute. Here's why I want you to understand something. So when you have three charts and you're looking at them all, you may say an opportunity over here, okay? So if you do and you're thinking about trading that, switch that maybe or create another set of charts and make that your primary, and then take a look at 5 time frames lower than that. So maybe like the 15-minute time frame, and see it. So basically, if the 60 becomes your primary, then this would be here, 60 would be here, and you could put the daily over here. You understand what I'm saying? So if you see an opportunity on one of the time frames, before you enter, why don't you just check the lower time frame as well and see if you're still in good shape on that trade, because maybe you could wait a little bit and even get a better entry even on a short-term short-term time frame, sorry. Okay, so think about that. Does that make sense to everybody? Okay, good. So that's kind of a little bit of a twist in terms of if you see something on one of the short-term time frames, you then maybe want to put that in the center and make that your primary, and then put the 15-minute on the far left. Okay, good. Okay. All right, so Jim is asking on scanning. Now on scanning, what we do is we use the scanner up here, and I have it set up basically pretty specific. I got some 1-minute scans here. I've got, different markets here set up, indexes set up in here. And so what you want to do on this is there's many different ways you can use it. So the first thing I like to do is I like to take a look at the trade confirmer, and I set the trade confirmer up, and let me just go there real quick. So let me go to columns. Columns is the same thing as the indicators on this. So if I go to columns and go to trade confirmer, okay, I can adjust the strictness of what I'm looking at. Okay, so in this case here, I've got the trade confirmer column only going to indicate when the OWL, PTF, and TLM are in alignment. Okay, so that's a very strict look. But if I wanted to make it simpler, I take out the TLM because I usually don't look at that for initial entries and put that there. So let's go back here and it will reload that column on the far left. You can see it white and now it's loading and you're going to probably see more opportunities at that point. So now if we go through here, all right, we've got the OWL and here, okay, so it happens to have them three. So here's, for example, an index here that I'll show you. Ooh, that's a bad one. All right, so here, I forgot I was on the index. All right, so here is the OEX, okay, and so that's still loading on that. But what it's doing here is it's actually looking at the OWL and the PTF on these time frames here, okay, at the bottom. And so I can scan for markets there like that. All right, here's the, let's find one that is not so jibber-jabbering. How about, let's just take a look at silver. Silver's a good one. Okay, so silver, okay, so that's got a neutral, okay, indication on the column. So this is not one I'd probably look at necessarily on the daily time frame. I also have scanners over here called the multiple time frame scanners. And so those are looking at each time frame. Okay, so I've got the short term looking for, in this case, 60 minutes, and this is daily, and this is weekly. All right, and so that's looking for short-term trades. So each scanner has a function and delivers information to me in order for me to decide if I have a green PTF, if I have a green owl going in the right direction, and if I have that on multiple time frames, and I'll look at that. So when the column pops up, a bullish column, for example, I will look at that and see if it's too late or ideal to get into a trade. And so when you load the entire NASDAQ market in, what that allows you to do is focus on the parameters you set, and you can just go through that column and quickly take a look at it. And if you click the column, okay, it will bring up the greens, click it again, and there's no reds, so it's all green. So it brings up the greens, or you can click the name here and it will come alphabetical. So you can click back and forth. We have the Elliott wave scanners too, so I don't know if anybody's using those, but sometimes, those will help. So if I get a green here and I want to look and see, what kind of market I'm looking at here. All right, so I got a wave 3 coming up here. All right, so things are looking pretty good on that. All right. And so, but it's pretty extensive. So I got a number of pyramids in a row. And if you look at this column for the turbo scanner, it's telling me I have at least 6. So I'm not going to be looking at that. So when I get let's say I get something that comes up here bullish, like here and here, but I see 6 consecutives, I'm not going to bother with it. Okay. I'm just not going to bother with it because it's too extended, because it has 6 already pyramids. So maybe I'll look at it for a change in direction. So the scanners can be set up to look at. They're actually absolutely invaluable, but you can set them up to really look at markets based on, do you want to do a PTF trade? Well, if you want to do a PTF trade, just look at the PTF column, okay? And then go in and see if there's enough, use your risk to reward calculator and see if there's enough P&L for a PTF scalp trade. If you want to try to get into a trend and a significant one, then look at your Elliott Wave 3 columns, but then you're going to have to go in and see if it's an extended Elliott Wave 3 or the beginning. So you still need to look at the chart, but it cuts down having to thumb through a ton of charts. Okay, so that's kind of, a good thing to know. And then this, the multiple time frame scanner, can even take it one step further. If you want to see, let's say I want to make sure the short term and the intermediate term are in sync, then for a bullish trade, then because that's looking at certain parameters for a bullish trade, you look at that and then take a look and say, okay, well, there's an opportunity on the short term, but maybe not on the intermediate. So let's look at the 60-minute chart, and then let's look at the 15-minute chart under that and see if that warrants a short-term trade. Likewise, if you have an intermediate that's good, okay, well, that's good. All right, then you can look at that one, and then you look at the underlying, it says no trend there. Okay, so then you got a situation where, okay, the 60 minutes not in alignment with that, so that's not so good, okay? But it might be good for a longer term trade because it's green here and green there. So it all depends on your time horizons, and a lot of these things can be set up and customized at different time frames based on how you want to trade. But you can get it to a very systematic way in which you actually can just look at each column and row and go right down the different columns, and it will give you everything you need to know without even looking at the chart. And then if something pops up as good, then you can actually go to the chart, and it cuts your screening time 100 times, by 100 times. I'm not kidding you. It's so fast. Did that help, James? I covered a lot. I mean, I didn't go into each specific situation, but I did cover a lot to give you a good overview of that. And then again, I'm not sure what scanners you may have, so I don't know what you're really focusing on. Okay. All right. Cryptos, we think cryptos, okay, I'm bullish on cryptos long term. It's not unusual to have, we've had a pullback on this, but as long as this big bottom down here holds, I'm bullish. I'm staying bullish on that, okay? Okay, so you have all the scanners. All right. So what platform are you using again? Okay, so you have Ninja. All right. So what I would suggest doing, all right, for starting is let's take one scanner at a time each week, okay, and go through it. So let's take a look. Let's go back here to the trade confirmer. Next week, let's do the Elliott wave. The week after, the multiple time frame, and then the turbo. This would be a good series, I think, for everybody. So on the turbo scanner, for me personally, when I look for setups, I don't want to see, I don't care about the TLM. The TLM, the trend line master, is going to be, the trend is going to be the last thing that gets confirmed on a trend, right? Because if you get in early on a trend, you may not be 100% sure the trend is in place. For example, if the trend is coming off the bottom, and let's say you've done an Elliott wave count, you're at the bottom of 5, and you've come up off that bottom, and you kind of are looking to get in early on the next move up. Well, for you to wait for a trend to be identified by the trend line master, you're going to have a pullback and another high. A pyramid probably will form in here, but you're not going to be able to draw that trend line until you break that high, right? So if you want to get in on that first leg up after the bottom, all right, you're going to have to not rely on the trend line master for that. So you put your stop down here, you get in early, and I get in early if I'm pretty sure on the wave count, and I've got a good owl that's turning, and the PTF is not red, and I'll look for a new move to the upside. I might go in early on this leg, and you know I usually do, but I put my stop down here. However, okay, the trend is not going to be in place, so it does no good to scan using the trend line master at that point, right? Now, I do use the trend line master to scale out of positions, and I also use it to add on. For example, let's say we get the pullback, the bottom holds, we get a resurgence, maybe you get a pyramid in here. Now you got a bullish trend line. Now the market moves up, pulls back again, and I get another one. Now I get a pyramid. Well, if I move my stop up here, there's no more risk in the first trade, right? Because the stop now is above where I got in, right? Because I got in over here. So now what I want to do is make sure I have a trend in place. So if I get the pyramid and I have a green trend line master on the ribbon, now I'll make sure that I use the, because if this is not green down here, if it was kind of a wishy-washy market and it really kind of is not looking good, the trend line master probably is going to be yellow. So I want to have a green trend line master before adding it in. Okay, so that's why, you know, sometimes I do like to scan for that to make sure if I'm thinking about adding in. All right, so that is that. So the reason what I'm telling you this for is you go to your columns. So go to anywhere in your scanner, right click, go to columns. Columns means indicators. And here's a whole list of what you have loaded down here. So go to the trade confirmer column. Highlight that. Okay. And you're going to have to do this for each tab that you have it running on. And then remove the trend line master, because you really don't need to know what the trend line's doing for an initial entry, and then put 2. So there's 2 things you have to do. Delete, backspace out the TLM, and change this to a 2, okay? And then hit OK. Now, notice the trend line column was white and now repopulate because it's changing, it's scanned. All right, so now, all right, I don't really care. Notice that here, the trade confirmer is bearish because the owl and the PTF are, even though this is bullish. So that's okay. Okay, let me take a look at that. So we go down here and we highlight that one. And what do we got cooking there? Well, we got bearish. And don't remember, this is keying off this time frame. And you can set that to whatever time frame you're not, but it's not looking at the 60 and it's not looking at the weekly at that point. What's doing that for you is the multiple time frame analysis. It's kind of looking at a little bit of everything plus price. So if we right click on this, go to columns again, go to trade confirmer, you'll see that it's set up only to look at the daily time frame. So that's your, you know, in our case, that's our primary chart. So I'm looking here. So it's bearish, right? Okay, so it's bearish. But if I look here at the, so it alerted me to look at this chart, right? So, okay, right away I'm thinking, well, maybe there's a bearish trade here because this is, I can take a scalp trade here. But if you look at the 60-minute as well, this is why you got to look at the chart. This is green. So we're still going up. So probably a bearish trade would be better when this reaches the target, because it should turn around and come back down. All right. So now you want to put this on a watch list. So even though it's not quite ready yet, if it gets to that target zone, it will be. So now I've created my first stock for a bearish trade on a watch list. And you can go scroll down and go through all these just like that. Okay. Same thing with this one. Okay. Green here, not quite ready yet. All right. So that's just a quick way you can do it. And then sometimes you'll find that you may be getting in early or late on a trend, and that will determine whether you should be taking the trade or not. All right. So play around for this week only. That's all I'm going to cover today. Next week we'll do the Elliott wave, but cover that, okay, for this week, and play around with just the trend line, just the trade confirmer, and see if you can sort through the columns of red and green created on the trade confirmer column, okay? And if you double click this, it'll bring the bearish ones up, and if there was any green ones, it would bring the greens up, but it skipped that, it went right to neutral. And then if you want to go back to just the alphabet on having it put in sync based on the alphabet of the instrument, you can just go to the instrument and double click it. Okay, did that help? Okay, yeah, well, that's great. I'm so glad you asked, because I don't know what you guys are having trouble with or not unless you tell me, so that's great. All right, so play around. Your homework today, as well as everybody, is to play around with the setting on the trade confirmer, see what it does, and see what comes up when you look at those things. And if something's not quite right, you add it on a watch list. But, again, a watch list is kind of like, in sales, they have the prospect list, they have people ready to buy in 6 months or 1 month. But if you build a large watch list, then what happens is that you will never run out of trades, okay? The larger the watch list, the more opportunities you'll have each and every week as they come off the watch list and into the buy or sell category. But I use the trade confirmer a lot, specifically also for just finding scalp trades sometimes based off the PTF. So next week, we'll go over the Elliott wave, and then we'll go over combining the Elliott wave with the trade confirmer. And then we'll add the multiple time frame analysis the week after, and then the turbo scanner as well. And then you'll be able to see, kind of like a pilot when he looks at all his instruments on the plane. When you look at a cockpit and you look at all those instruments, you say, oh my gosh, how the hell does he see everything? Well, you do it by breaking it down by instrument, and then you learn how to combine them, and then it becomes quickly just an internal glance on looking at these and saying, okay, there's an opportunity, but you have to know how each one works in an isolated situation first before you can combine them all. And I think probably if anybody struggles with the scanner, it's that part of it, especially when they own them all like you do, Jim. That's the part that can cause the confusion. So work on the trend, oh, my pleasure. Work on the trade confirmer first. That's the first thing. Kind of play around with the settings, understand what it's telling you. And basically, when you look at these 3 readings, you don't have to have the chart open because it's right there. And then if something stands out like this, then you want to look at the chart. Now, another thing you could do too, all right, is look at every PTF that's either bullish or bearish, and don't worry about the owl, and just kind of note which ones have a bullish and bearish one, and take a look at the chart and see if the owl's about to roll over but didn't yet, and maybe you can put that on your watch list early. Okay, so play around with that, because we have something called a PTF trade, and that's a scalp trade. So if the PTF is a certain color, it's always an indication of a possible trade, either now or sometime in the near future. Okay, good. All right, good session today, guys. All right, great to be here. So I recorded this. We'll put the recordings in the YouTube area, in our unlisted channel area, and you have the access link by logging into the client portal. All right, so Gene, any last minute wrap ups you want to do?
No wrap-ups, everything, great session, great questions, so excellent.
Yeah, I love the questions. Awesome. All right, because that's what this is all for. And if I explain something, and sometimes, it's like I've been doing this for a long time. So if I kind of like explain something, but I'm assuming you know something that you may not, you got to stop me, and I'll be glad to clarify. Okay, that's another thing. No such thing as a bad question, and no such thing as asking for clarification. Okay, that's all good. All right, so we'll see you here next week, everybody, okay? Thanks for being here and have a great week.